Thank you for joining us today. I have got James with me, and we're going to be talking about Bitcoin and cryptocurrencies today. But before we dive into the questions that I have for you, can you give everybody an introduction, James?
Sure. So I'm James Roloff. I'm Emma's husband. I'm also the sales and marketing person for a website design company here in Madison, Wisconsin. So that's kind of my background is mostly in the sales and marketing space, but I also do a lot of stuff with just general business investing. And we've been, in the Bitcoin space for probably 4 or 5 years now. So that's kind of my background specifically in the Bitcoin and cryptocurrency space.
In case anybody was wondering what a Tuesday night conversation at our house looks like while we're eating our take and bake pizzas, you're going to
Well, right
get.
now, the best part about the Papa Murphy's Take and Bake Pizza in October is that they have the jack-o'-lantern shaped ones, which
Yeah, and
is
they
fun
have
and
extra
exciting.
crust, which is
Yeah,
like my dream come true.
it is.
So, to get us started, I always have a conversation that starts with kind of the basics and making sure everybody is on the same page while we go into the discussion. So, with that in mind, James, can you give everybody an overview of what Bitcoin and cryptocurrencies are?
Sure. So Bitcoin in particular is the first cryptocurrency that kind of made it mainstream. Basically since the 80s and 90s, early 2000s, people have been trying to make some sort of digital money. So the concept isn't new, but it's kind of the first one that actually took off and was successful. They had all the ingredients it needed. So kind of on a basic level, what Bitcoin is it's a digital money. There's no central control. There's no bank. There's no government. There's no organization that controls it. It's strictly a database-driven, node-driven system that's essentially a protocol that allows you to transfer money and value over the internet. So that's kind of the basic idea behind it. What kind of makes it special too is characteristics as far as money goes. So there's a fixed supply, so kind of like almost like a gold, where you can't print new gold. You can obviously mine new gold, but there's kind of a fixed supply behind it. Bitcoin only has like a hard cap of 21 million Bitcoin, so it's very absolute scarcity when it comes to its actual money features. Other things behind it too, though, is that it's digital, so you can transfer it across the world. You can send $1,000 from here to China, and well, it's not China because they banned it there, but you can send $1,000 from here to India at the speed of light, essentially. So unlike gold or unlike traditional banking systems, which have to go through a central bank and kind of go through layers of banking, it can travel at the speed of light. So it's a big part of it too. Additionally, it's divisible. So like I said before, there's only 21 million Bitcoin that'll ever be created, but it's also divisible. So you can break it down into 1/100 millionth of a coin that allows you to transact fractions of a penny, essentially. So it has the benefits of a gold-like features as far as monetary assets go, but also has the benefits of digital technology as well.
So, what I want to talk about then, and knowing that we're talking about digital transformation as an idea, how does Bitcoin or cryptocurrencies have such an impact or ability to be so disruptive in the finance space, given kind of what you already outlined for us?
Yeah, I think the big thing is kind of layers to it, right? Because at the very base level, money is one of the most important things in human civilization. And right now, most of our money is run by governments. So you have the dollar, you have the euro, you have the Japanese currencies and China currency, all kind of stuff too. And those are kind of the baseline money for the world. That's how value is transacted. So on a very basic level, we kind of see the long-term trajectory of cryptocurrencies and Bitcoin in particular is that they could disrupt central banking as a whole. They could be a whole new way of storing value, transferring value as kind of a base layer for the world's economy. So that's kind of one side of things. As you kind of go up in nature and kind of on the additional levels on top of that, on the banking sector in particular, there's a very good chance that banks are going to be custodying Bitcoin in the near future. So allow their banking customers to essentially have an account within the bank that allows them to hold on to Bitcoin, which means they can do loans that collateralize Bitcoin, allow people to use that essentially as like a line of credit. It could be rewards cards that offer some Bitcoin as rewards instead of dollar back or cash back kind of type things. So there's a lot of things there. Insurance is getting into it too right now. So Mass Mutual bought some Bitcoin back in December of 2020. Because as they look at ways to preserve their wealth over time, as government bonds lose value more and more and return less over time, a lot of insurance companies are looking for ways to preserve wealth. So I think insurance companies, pension funds, you're going to see them get into the space a lot more too, just to make sure that they're able to preserve wealth over the long haul.
Great. And so when we hear about Bitcoin in specifically, and right now it's in a bear market, so we're going to start to see more headlines. I even saw this morning, going back to what you were saying about banks are aggressively looking for crypto talent to bring into their teams. We're going to start seeing more and more headlines. But one of the things that we often see associated with new technology is kind of the myths. And one of the things that I talk a lot about on this show with other guests is how, what are some of the myths with AI or those types of things. So can you share maybe 2 or 3 myths that are typically propagated pretty extensively within the media as it's tied to Bitcoin, and maybe talk through why they aren't as concerning as maybe the headlines would suggest that they are?
Sure. So I think the big myth that came out more recently via Elon Musk was the energy concern with Bitcoin. So how Bitcoin functions is you essentially have a blockchain, which is a database that allows you to have essentially read-only blocks, and then new blocks get added on top of that. And in order to create new blocks, you have to do what's called mining, and that takes a lot of energy, a lot of computing power, and that's how you form the blocks that are added to the blockchain going forward. And a lot of people see this as a bad thing, but in reality, the energy usage of Bitcoin is a feature of it. That is what allows it to be secure and be neutral with no third party. Because right now, basically, it's essentially a probabilistic. Whoever is able to spend the most computing power and the most energy gets rewarded with that block, which means that no one's in control of it. It's kind of a game theory type thing at play, where lots of people across the world are all trying to use computing power in order to secure that next block. And I think when you compare the energy that it takes to do that versus militaries that are controlling oil fields and that kind of thing that really underpin the US dollar and the euro, and government inflationary currencies, it's kind of a trade-off, right? Do you want to use electricity or do you want to use military might to control trade agreements and whatnot across the world too? So there's a big component there. Additionally, other cryptocurrencies don't use proof of work, but what controls them is existing token holders or centralized servers or things like that too. So that kind of removes that benefit of having that decentralization that Bitcoin has, and kind of introduces that third-party risk again too. So energy is a big one. And I guess learned about energy too is that as far as industries go, Bitcoin mining is probably one of the most renewable source energies, across any industry. Somewhere between 40 to 60% of the energy mix is through hydro, solar, or wind power. So again, when you look at the actual energy usage, it's not that bad of a thing. The other big one too is that's expensive. Right now, as we're recording this, I think that Bitcoin's around like $61,000 per Bitcoin. So a lot of people feel like they're late to the game. They can't buy Bitcoin right now. But the reality is most people, almost everybody across the world, will never own a full Bitcoin. It's, again, like I mentioned earlier, it's divisible. So you can buy fractions of a Bitcoin. You can just save your wealth into the Bitcoin network, not necessarily a single Bitcoin, but you buy into the network, you save your wealth there. There's absolute scarcity to it. So it's not going to be inflated away. So I think that expensive myth, a lot of it's psychological too, right? There's unit bias, right? Where I can buy this cryptocurrency and it costs 0.002 cents, or I can buy Bitcoin at $60,000. I have a higher potential return on that cheaper one, but it's not really the reality. More of it comes down to how much money is actually in that network, how liquid is that market, how stable is that network. So again, the expensive thing's probably the other big myth that we're seeing too. And probably the last one is scalability, because Bitcoin releases a new block every 10 minutes, which means in order to confirm a transaction, it takes 10 minutes for a new block to be created to get that confirmation. It also only allows about 7 transactions per second, and that's due to the size of the block that gets created. It's only a certain amount of megabytes of data are allowed to store in each block. So a lot of people point to that. Again, Elon Musk was commented on that back in May too, basically saying that it's obsolete, it can't scale, that kind of thing. But in reality, the reason the block sizes are so small, the reason it takes 10 minutes to do that is so that individual people, not big central Amazon Web Services servers have to run this thing. individual people can run nodes in their house. They can verify the blockchain themselves, and there's no centralization of who actually controls the blockchain. So how it's going to scale is going to be these second layers, they call them. So right now, there's something called the Lightning Network, which is basically a layer on top of the base network that allows people to basically instantly transact, but then not have final confirmation until later. But it allows you to do small transactions. So let's just say, it's happening right now in El Salvador. You can buy coffee for $1. The transaction fee is less than 1 penny, but you don't have like final settlement until a later date. So just like using a credit card, in our current U.S. dollar system. So that's one way. But I think more importantly, from a business perspective, Visa, MasterCard, PayPal, Square, all of these companies also become layer 2 solutions, so that if you are a Visa user and they tie into the Bitcoin network, Visa can do the final settlement in between banks and then finally commit that to the blockchain on a much bigger basis. But you as an end user can use that Visa payment system that's denominated in Bitcoin to actually do transactions too. So that's kind of the scaling side of things, that instead of scaling at that base layer, which encourages centralization, you scale at that second layer and preserve that sound monetary system at the base layer.
Well, thank you for joining me finally for our interview. Just a little insight. This has been long in the making when we finally decided to sit down and take ourselves seriously and have this conversation on camera. So thank you for joining me, James. And everybody who's interested in learning a little bit more about it, you can certainly connect with James on LinkedIn. There's also quite the Bitcoin Twitter community that you are very involved in, along with many other folks. If people are interested in learning more about it, I would suggest checking out. But thank you very much, James, and have a wonderful day, everyone.
Hey, you too. Bye.
If you're looking for expert tips on how to get started with your transformation or looking to hone in on your approach, make sure that you subscribe to our channel to catch our weekly Digital Transformation Talk series, where we interview experts from around the world on how to make it happen.